Welcome to An Alternate View. I'm Hugh Anderson, and this is what caught my attention this week. Marvin Gaye asked, "What's going on?" Well, that's what I'd like to know. Just last week, we had a jaw-dropping decline in the stock market, which lasted a full 6.5 hours, the length of a trading session. Then off to the races we went again. Now, as a reminder, I started this video series to essentially share some of the thoughts from some of the best, albeit not most well-known research sources money can buy. The Felder Report is one such resource. Jesse Felder knows his way around the financial markets, and he had some very interesting things to share this week. So let's start with what's going on beneath the headlines. The major tech darlings reported nothing short of spectacular earnings again this week. Since these stocks comprise well over 20% of the major stock market indices' market capitalization, they can make it appear that all is well. But my question is it? So let's take a look. This graphic shows you the top line in blue is our little stock market that keeps going up like the ever-ready bunny, and it just keeps going and going and going. The line on the bottom, however, is the part of the stock market that is most sensitive to how the real economy is acting. By real economy, I mean where you and I work, shop, and play, and where goods and services are bought and sold. Is there something they are not telling us? And by they, I mean the glamour stocks. Perhaps, so let's dive a little deeper. The Dow Industrials is an index comprised of 30 major stocks assembled to arguably reflect the U.S. economy. The Dow Transports is an index that comprises trucks, trains, cargo ships, and other transportation apparatus that provides the material to the factories that produce the goods, and then they deliver them to the stores and homes that we live in. So if you take a look at this one, you'll see that the top line is the Dow Industrials that recently hit an all-time high, which is a very long time, and seems to be staying there. On the other hand, the Dow Transports, which is the red line, appear not to agree with the industrial counterparts. That index is declining in a very distinct manner. Could the post-pandemic reopening economic boom be cooling off? This divergence can't be ignored for too long, according to history. So let's move on to one of my favorite indicators that Jesse follows very closely. This shows just how enthusiastically company insiders are selling their own stock. Now, to be fair, insiders may sell for any number of reasons. They have bills to pay, taxes perhaps, or they just need some cash in the old checking account. Insider buying might be considered a more significant indicator because it shows faith in the company's prospects. But the trajectory of this insider selling activity certainly does give one pause. And finally, the dog days of summer were historically the period following the heliacal rising of the star system Sirius, which Hellenistic astrology connected with heat, drought, sudden thunderstorms, lethargy, fever, mad dogs, and bad luck. Well, the dog days have also been known to create madness among the bulls and bears on Wall Street. You've been warned. So that's it for this week. Please don't hesitate to pass this video along to a friend and visit our YouTube channel for more videos from my team here at Hightower Las Vegas. Until next time, I'm Hugh Anderson, and this has been An Alternate View.